Hello fellow traders. Today we'll explore triangle chart patterns and the differences between the symmetrical, ascending, and descending structures, and how traders use them to anticipate price breakouts. We'll finish with a real-world example on Tesla to tie it all together. Today we're going to get into triangles in trading, symmetrical, ascending, and descending by a pajama trader. Give this a like and subscribe. Let's get into it. Introduction to triangles. Triangles are consolidation patterns that typically represent a pause before the next market move. They form as price compresses into narrow ranges, converging trend lines, signaling equilibrium between buyers and sellers. When the pattern resolves, the breakout direction often dictates the next major move. Triangles are like a cold spring in the market, building up pressure as price narrows within converging trend lines. Traders look to position ahead of the explosive breakout that usually follows. A symmetrical triangle. The symmetrical triangle is formed by a series of lower highs and higher lows, creating two converging trend lines. It typically signals in direction in the markets, with pressure building for a breakout in either direction. Often the move continues in the direction of the prior trend. When we see a symmetrical triangle, it often suggests that both buyers and sellers are equally matched. This creates a period of stalemate that ends in a breakout, often following the direction of the stock's earlier path. An ascending triangle. In an ascending triangle, price action is capped by a horizontal resistance line, but supported by an upward sloping trend line. This shows that buyers are consistently stepping in at higher levels while sellers face increasing pressure at fixed resistance areas. This eventual breakout is most often to the upside. The ascending triangle is a bullish continuation pattern. Higher lows show strong demand while resistance gets tested repeatedly until eventually it breaks, releasing momentum to the higher side. A descending triangle. A descending triangle is characterized by flat support level at the bottom and declining highs at the top. This reveals sustaining downward pressure as buyers defend the same support level, but decreasing strength shown by lower highs. The outcome usually results in a break to the lower. This bearish counterpart is the ascending triangle. Sellers dominate the action, pressing lower highs against the support floor until that finally cracks. An example of a triangle on Tesla. So I wanted to go over the triangle pattern and then go over where one could have taken advantage of seeing this pattern. So right around 297, you have one part of the area forming. So you got 297, and then you can pretty much say it ran up there. And then you have your support area here, and you have your resistance area, pretty much lining up like that. I know that's a crazy looking flag, but for the most part, that's the pattern. So I'll leave that there. So imagine that you got into this trade. You saw the support forming here at 297. You pick up shares or you buy a call and you wait. Or if you want to buy the top and sell the top, you essentially wait for it to get to 246 to break out. You could essentially buy it support at 314, or you could buy the support at 338 just before it broke out in anticipation of this breakout, because it looks like you won't see any kind of resistance until you get about the mid 4 area and essentially higher. Tesla in mid 2025 developed an ascending triangle formation. Resistance was set around the 370 mark, while higher lows marked consistent buying support. Eventually, Tesla broke to the upside toward 395, confirming the bullish bias of the pattern drawn on the chart. Tesla provided the textbook example of this setup. buyers continuously forced higher lows against the resistance ceiling of 370. True to the pattern, demand overwhelmed that supply wall, producing an upside breakout to 395. A trader viewed Tesla's ascending triangle could enter a position once the price broke above 370, the resistance level. While the pattern's measured move based on the height of it is nearly $100, a target of 470 is reasonable. A prudent stop loss would be placed just underneath, prior to the higher low at 343. This produces a favorable risk to reward ratio of roughly 3-to-1. This is how a trader might have taken advantage of the trade. Once 370 resistance gave way, the setup signaled an entry opportunity. A projected target near 470 was calculated from the triangle's height, while the stop under 340 helped define the risk. The structure provides a strong balance of high reward, high potential against a defined risk. Analyst sentiment on Tesla. Market analysts remain largely supportive of Tesla following this breakout pattern. The distribution of analyst sentiment skews positively, with approximately 55% rating the stock as a buy, 30% rating it as a hold, and 15% labeling it as a sell. This sentiment structure aligns with the bullish technical setup provided by the ascending triangle. Analyst backing supports the technical case. A majority remain bullish on Tesla, giving us a layer of confirmation that the strong technical breakout is supported by growth expectations in the EV sector. Key takeaways. Triangles represent powerful continuation or reversal patterns. Symmetrical triangles suggest neutrality and require patience for confirmation. Ascending triangles favor bullish resolution, while descending triangles lean bearish. Tesla's real-world example in 2025 illustrates how an ascending triangle can deliver a successful breakout trade setup when combined with positive fundamental sentiment. The big takeaway is that the triangles are versatile tools. Symmetrical ones act as pressure cookers needing confirmation. Ascending triangles bias bullish breakouts, and descending triangles bearish breaks. Tesla pattern and the breakout in mid-2025 shows clearly how these play out, especially when supported by a positive analyst consensus. Thanks again for watching.